Hey, good morning, everyone. Welcome and thank you for taking the time to dial in. Uh, I know it's been rainy and everyone got caught up a little bit, and I hope everyone gets to sleep in a little bit today because I know it's been a busy season. All right, I'm going to jump right in. We may or may not stay the whole 20 minutes, but that's okay because there's really not a whole lot of new news that's been circulating. But for the news that's out there, it's been pretty impactful, and it seems to just be accelerating the the trade lower, right? So what the issue is the foreign minister from Russia today has come out and said, "Hey, we've got we've got an interest in brokering more of a peace deal and allowing shipments of commodities out of the country in exchange for a lift of tariffs." And so that's sent wheat lower all over the world and kind of accelerated the action that we've been seeing over the last few weeks. The second thing that is significant is that China is banging the anti-American drum um, by coming to agreements with South America to import more corn and soybeans. And so they're openly saying, hey, we're going to import everything from South America that we normally would have imported from the Ukraine. So the Ukraine situation is not an issue to China. They've also, there's rumors that they're expanding lockdowns again. There's rumors that a few thousand people out of Beijing were actually taken from their homes and moved to a different province for quarantine. Um, so yeah, that's nice, right? You've got lots of bearish action reinforcing, or lots of bearish news reinforcing bearish action, which is exactly what you would expect. So we have this peak in corn from April 29th, and we've worked it lower. We had our secondary rally, and now last week we talked about the fact that we did not want to see these two lows give way because that would leave behind a three-wave move right here, which we did, and so now we're working a little bit lower. But let's back up just a little bit more, okay? Um, let's keep the entire picture in perspective. Um, when we work lower, we need to decide whether or not we're starting a new move down or whether we're just in a corrective pattern. Or is it a pullback in a larger uptrend? And you can see very clearly that corn's in an uptrend. And this pullback, this is the question. Are we starting a new downtrend or are we in an uptrend? And as of today, we're still in an uptrend and this still qualifies as a pullback. So the question is where will it end and where will buyers start to reemerge? And obviously nobody knows for sure what that answer is, but if we've been talking about this for several weeks during this pullback. If you look at this low to the peak and you run a 61.8% retracement level, that's what this number is right here at 742. So if we come down to 742, we should get bought right in here, and we should expect to bounce back higher. A second thing that we want to watch closes outside of this channel line. So one way to distinguish between corrective price action and impulsive price action is whether or not the move is contained within parallel lines. So you draw those lines by coming to your peak and then your secondary reversal point and then snapping it to the intermediate swing, okay? So peak, peak, and then you snap it down to here and you create a parallel line. Action contained within these parallel lines above 61.8 is considered corrective. Now, if we add our cloud on top of it, this is what we've been talking about for several weeks, right? We want to see this cloud hold. So trading down into it is a sign of weakness. It's not something that we're very excited to see. Trading all the way through it would be much worse. So what we want to see is we want to see corn grind itself lower down into the 61.8% retracement level, and then base, and then start to work higher back out above it. If we see a big impulsive move lower on a closing basis below the 745 level, then corn probably has different issues. You can see if we do that, and if we do it on an impulsive level or an impulsive manner, we will have blown back through this area of chart support that has held for a long time, right? It's held since it was resistance all the way through March, and now we've broken through it, and now we're coming back down to test it. It's okay for charts to test. What we don't want to see are successive closes on an impulsive manner down into it, and clearly we don't want to see it move all the way down into 697. So this red dotted line is a line that we mentioned a few weeks ago. It's 720. I really think that's the level that July corn and the nearby's got to hold, or we're going to have significant chart damage. And if we close below that or collapse it in an impulsive way, I think that's our tell, and we need to be much more evasive. And supporting this argument here that this is just a corrective move that should base in the next few days in the call it 740 area, 740, 750, somewhere in here, is new crop. Let me pull the new crop chart up here. So I'm going to tighten this up just a little bit. All right, so new crop looks like it's really fallen down. But if you look at what we've done, we haven't given up any major technical support levels. We've held the top of the cloud so far, and we don't even have intermediate trend lines with which to draw parallel lines. If you back this out even further, what you actually start to see is the potential for a flag formation starting to build. So your new crop contracts are actually much stronger than your old crop, which is strange because the old new spread has actually increased during this decline. So as we've broken new crop, the spread between old and new has actually gotten more bullish. The inverse has gotten bigger to the tune of about 15 cents, which is consistent with basis levels that are raging hot and all over the country, both in corn and beans. So while the price action on the nearby charts looks absolutely terrifying and scary, the stuff happening under the surface is actually very supportive of prices. So markets have got to do what they've got to do in order to extract pain on people to get movement. And if you've got tight-fisted ownership, this is a good way to shake the trees and get things out of it, okay? Now you're going to hear lots of rhetoric and lots of talk about this line right here, which is the 50-day moving average. If you see what we're doing, if we close today, it'll be a close below. A close today below 769 is going to be a close below the moving average. So we went ahead and sold old crop corn yesterday, partly because of this, and partly because we just don't want to see what this line is. We didn't want to see this three-wave move get left behind here. We wanted to see it pull back and then rally. So 769 is a safe level to sell it because we can accelerate lower out of this setup. Don't misinterpret my my comments here. I think we're corrective. I think we're working higher because I don't think the fundamentals have changed enough, and I don't think new crop's done enough damage to warrant much lower prices. But it is concerning that we blew through these lows, and if we accelerate it lower, we need to be careful. So it was prudent to go ahead and sell old crop, and we may take a stab at re-owning it as we base down in here. So we need to stay tuned. We need to stay tuned to what's happening in the news flow and in the technical action as we drag a little bit lower. All right. So to summarize corn, despite the recent the scary action, right? The undercurrents, the basis levels, the strength, the new crop formations, all really warrant that this is corrective and not the end of a move. but it's going to shake a lot of people out and it's going to scare people. And that's what you actually need to have happen in order to rocket it higher. So where's the selling going to come from if the farmer's oversold? Well, the funds are really long and the end users are covered. So if the end users start to lift hedges and hedge funds liquidate, that can put downward pressure on these markets. But that's also your fodder for a stronger rally. If they're liquidating and not going short, then they're going to want to re-own it. So so it can actually make an up move more dramatic than it would otherwise. All right, let's look at soybeans. Let's start with the weekly chart on soybeans. They're getting banged around quite a bit, right? We're off 22 here in the July this morning, and we're just getting chopped up. So on the weekly chart, this is what it looks like. It's just a consolidation pattern before we rocket higher. The technicals on the bean weekly chart actually look stronger than any other market that we're following. And it's strange because they have the fundamentals that are probably the most bearish. It's got the most wiggle room on the balance sheet. It's got the most it's got the most acres. It's got the most yield potential to cause significant growth in it. It's got the argument that this is an oil-led rally, not a meal-led rally, and so therefore it's somehow inferior to it's an inferior rally. There's all this logic out there that says, man, beans shouldn't be where they are, and yet here we are consolidating in a $2 window. Granted, that's a big scary window, but it's just a consolidation right at this peak level. And what do we know about consolidation? It generally favors expansion, right? Consolidation favors continuation. So our MACD, our force index, we're coming down to our zero lines, which are buy signals. I think that beans, we need to pay attention to them here because they could turn hot and actually turn into the leader under this setup and drag corn with it. And that would catch a lot of people way off guard if that were to happen. Basis levels in beans, just like corn, are exploding. Basis levels on the rivers yesterday went to $1 over on old crop soybeans. That's a huge number. Couple that with corn, it tells you that demand is on fire, not waning, and that's not bearish. So don't get confused. Unless we really do chart damage, we've got to stay bullish on these counts. Beans, they have kind of a scary count here because they've got a B and a 2. It looks scary. That's 1, 2, 3, 4 times that we've topped beans out at $17 on the 24th of February, on the 23rd of March, on the 22nd of April, and boom, the 23rd of May. So 4 consecutive months between the 22nd and 23rd, the funds started liquidating into month end on soybeans before they started buying it. It works until it doesn't, guys, and eventually somebody's going to get caught with their hand in the cookie jar out of that setup. So, so I don't think that is significant. There's an old saying: double tops usually hold, triple tops never do. And I don't know what they do with quadruple tops, to be honest. All I know is that the weekly chart is consolidated, and I think that is more bullish than bearish. But we're going to be somewhat cautious because we do have a very thin cloud, and a thin cloud means weak support. So now what's caused the thin cloud? Well, it's caused this big sideways consolidation has caused it, right? Remember, this cloud was plotted 26 days ago, just like today's is being plotted off today's price action. So what does it mean? It means that this is thin. So if we do break lower, then it can accelerate for sure. So it's not a super bullish setup on the daily chart setup, but when you look at the weeklies, it's really strong actually. Now let's look at wheat. I know everybody's worried about wheat. Here's your nearby wheat contract. Let me get this off of here. So wheat looks like a mess, right? Oh, that's corn. Hold on. Here's wheat. All right, wheat looks like a mess. We've got a 5, we've got a 13, we've got a huge reversal pattern, and we're down $1.78 from our peak, which was last week. So here in the last few days, we've had a lot of downward pressure, and that's being obviously exaggerated by everything happening in Ukraine. So if we just take a step back and look at how far wheat's come. Wheat can move all the way down to probably 950 before it does any major chart damage. And so we could see a trading range of wheat somewhere between 1450 and 10 and just have it bang around. So I don't think wheat's story is done because I don't think that the issues raging in Ukraine have really been addressed. One of the issues that we've been seeing in wheat are focused on Ukraine, but the real issues are weather related. It's a shrinking and deteriorating crop here. It's a shrinking crop in Europe or in France. It's a shrinking crop in India. And then you see Russia come out and just start saying, oh, our crop is getting bigger and bigger. Well, the weather models don't really support that argument either. And then Ukraine grows a huge amount of wheat and they can't get fuel. So about 12% of Ukraine's total fuel consumption nationally on an annual basis is used in May and June by farmers, and they can't get any fuel to their fields. So they may be able to plant it, they may be able to get access to seed and fertilizer and chemicals on the interior, but they can't get the fuel in order to get it on the field. So there's a huge question mark as to what their production will be in corn and in wheat in the next 12 months. So now I kind of want to wrap up with a final thought, which is this. Everything in the news flow is focused on China buying from Brazil and commodities moving out of the Ukraine. That's bearish only if the bushels exist, both in South America and in the Ukraine. Ukraine, we just went through why they may not. Now let's talk about South America, right? Think about the last 12 months what we know as a fact out of South America. We know that they burnt their bean crop up. We know their harvest was a total disaster, so much so that they curbed exports and stopped selling and banned them temporarily. Does that sound like China? China can come and just replace a whole other country's supply out of South America? No, I don't think so. Not until they plant another crop and harvest it. What do we know about their safrinha corn, about their original corn crop? Well, we know that it was a disaster. We know that they're probably 1 billion bushels below where they thought it was, and we know that the weather on this crop, on their safrinha crop, has not been overwhelmingly good. So we know that the world balance sheets are overstated because because they haven't been adjusted to reflect the lack of supply coming from South America. So, and then you have to look at our northern plains, which for the second consecutive year is having issues. So I don't think that the weather issues and the overall supply and demand function has added any bushels to the balance sheet yet, which is why we're seeing basis corn and bean basis in the interior here accelerate like crazy and go to really unforeseen levels. Like we're seeing and hearing levels that are just crazy. Now freight is also a train wreck because you either can't get drivers or they're moving into the oil field or whatever. So that's causing issues there too. But I don't think that there's enough to say, hey, this bull market is done. So despite recent weakness, I think the answer is be patient, get out of old crop if you're worried about it, especially corn. I wouldn't do anything in new crop yet. We need to see a lot more weakness, and we need to see a lot more clarity before we start taking those actions because the upside is simply too much. Now, if you can't stomach that, and you can't stomach watching, December corn potentially trade with a 6 in front of it, if you can't stomach that, then call us and we can figure out some sort of a hedge with a with some re-ownership on it. But that's going to be an inferior position to just owning the cash at this point, because the way the options are pricing and the way that they're being manipulated, you're better off retaining your cash, because that's going to be your biggest bang for the buck on an upward move. So that's why we're not recommending any new crop corn or bean sales yet. Okay, that's 20 minutes. I went longer than I really thought I would. And I know the news flow is scary. So if you need to talk through something, please call us. We're happy to talk. Remember, there's significant risk in trading commodity futures and options, and you should only do so in light of your own financial condition. I hope you guys have a great week. We will talk to you next Wednesday.